The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from optionpit.com, Mike Tusaw from knowyouroptionsinc.com, and John Grigas from Options Express.
Welcome back to the Option Block, and I hope everyone out there, all of our listeners, are prepared for the onslaught of the meat of the holiday season. I hope all your holiday shopping is done. If you celebrate Hanukkah, then you're all set. You're done. You can kind of sit back and relax. But yeah,
well, you got to get prepared for some good Chinese food.
Yeah, that's true. That's true. You got to find your good spot to carve out on Christmas Day and have some dim sum maybe, or maybe some pad thai or some Thai curry maybe to mix it up.
I love it. I had Thai last night with the list.
We'll mix it up ourselves. Our listeners have probably already guessed that voice is none other than McRib himself, Mark Sebastian. How you doing?
What happened to Greasy Meatball?
I'm mixing it up. I said I'm mixing it up today. I usually start with Greasy Meatball. Okay, if it makes you feel better, that is none other than the Greasy Meatball himself, Mark Sebastian, a.k.a. Mr. Mini Metals.
Oh, the Mini Metals. I actually asked for a Mini Metals Guitar Hero for my feed this Christmas.
That would be interesting. It's all covers of gospel tunes.
It's all covers of hardcore death metal Christian rock.
It's all Striper.
Yeah,
death metal Christian rock.
Unbelievable. It is the most intense trade music you'll ever hear.
Who was that? Wasp was the other one, right? Were they the one who was like the one of those ones? I don't know. There was a couple of them out there. That's my 80s reference for the day right there. Then, of course, we are also joined. Today he's to my right, so we'll mix it up a little bit for him, too. The man from the mountains himself, Dr. T. The women love him. Mr. Tusa, how you doing?
I'm doing well. Happy to be here. How are you?
Just to clarify for our listeners, you do have a PhD and also an MD, correct? I'm not calling you doctor just for that.
Yes, I do own a post hole digger, and because I'm from the mountains, I am a mountain doctor, just like Granny Clampett.
I love it.
Texas tea, black gold. All right, and our rotating Options Express seat today is actually empty. They are swamped for the holidays, and everyone's closing out their Santa Claus calls and puts. So Rob, Tim, and John are busy.
They promised they'd be home for Christmas.
So we are expressless today. So with that, we will dive right into the trading block.
The trading block.
And welcome to the trading block. This is the segment of the show where we discuss what's going on in the markets today. And it was another relatively light volume, light activity day. We closed S&P's up about 3 points, Dow down about 14. NASDAQ up a little over 6, and the VIX a little more than unched, up about 0.26 points on the day to close at 1637 on the VIX cash. There's a lot of interesting stuff floating around in the air today. Of course, I think some of the big news that's been dominating the cable news channels lately, all the saber rattling going on over there in the Korean Peninsula. And, today there's South Korea has a weapons drill going on today, so things are ratcheting up in maybe not the best of ways, and I thought it'd be an interesting topic to discuss on the show today. Looking at the VIX today, you would never think this was that big of a deal. We're still 1640 in the cash on the VIX, so what do we think will happen if, there is another shooting war breaks out on the Korean Peninsula? I mean, obviously it wouldn't be like 1950s all over again where China's pouring over the border and we're sending tens of thousands of troops, but we do have a substantial number of troops there, somewhere in the 30,000 range. And let's say North Korea does start shooting off artillery rounds into those troops again. Where are we looking at in the indices? What are we looking at in VIX? I mean, VIX has got to head north from there, I would think.
You would think so. I mean, but what's going to happen militarily? We drop some fly some jets over, bomb them from here to Kingdom Come, and the world is over. And not the world, the war is over. China
the world is over.
That would be a problem. China is not going to be stepping up to back the North Koreans. I don't think.
No. No one expects that.
Anything to do with that. I'll be real interested. But yeah, we bombed. If our jets do the bombing, I would expect a little pop. But let's not forget that after the Gulf invasion, volatility fell. It did not. The initial Gulf invasion back in '91, volatility actually fell. So I think if it was something quick, we might see a little blip. But I don't see anything remotely happening in terms of volatility as to what we might have seen in the flash crash or during the meltdown in '08. We could maybe get to 25 or 30, but I have a lot of trouble seeing anything major happen here.
So don't load up on those. Tell the listeners not to load up on those Jan 40 calls in the VIX, huh?
Well, you never know. You never know. Right now, the Jan future is trading about 1975. There's some real. We don't see any real uptick in risk until March, where they're trading about 23%. So, yeah, there's not a lot of built-in fear up, going forward.
Yeah,
all the futures are trading below 25.
Yeah, it kind of hits what we've been talking about for a while. And I've been looking at some where to enter in on some upside in the VIX for a while now, and it seems like the best opportunities are in the short term in the Jan range, because once you get out into Feb and March, some of the longer-term futures start coming into play. And so what about you, Mike? Obviously, the core of your business is protecting people from these sorts of events. I know you guys love your collars. Is that how you're positioning right now, just loading up on the collars and kind of taking a wait and see?
Yeah, I mean, for the most part, like, to give you an idea, if you look at kind of shifting this a little bit, but still in the volatility realm, GLD for once. This is a trade with which we're looking at today as we're adjusting our collars for the month. Let's say, and I'll just throw out the 140 call as an example. I'm not prepared to reveal our position yet, but I will in the coming weeks, just because we're still kind of doing some adjustments on some things right now. But the 140 calls for December, for example, for January. The 140 calls for January, as of the close of the market today, are trading at 81 by 83 cents. The 140 calls for February, you would think, would not be double that, or based upon just like common knowledge of option time decay not being linear and that type of thing. You would think it should be less than 160, or at least I would think so anyway, just kind of going into this. And like I said, we're still in the adjustment process right now, so I'm not able to really reveal everything of what we're doing right now, but just to kind of what we're noticing.
Yeah, they're hovering around $2.
Yeah, they're around $2. So theoretically, this might be an opportunity to where you might want to be buying some near-term premium and selling some longer-term premium along those lines, because this is something that's not typical a lot of times in every type of trading. I mean, would you guys agree on that, or am I just crazy for seeing this, or what are some of your guys' thoughts on that?
Yeah, it looks like they're pricing in, obviously, a bit of a metals pop longer term going in here. And that kind of makes me wonder if maybe that is based on the macro political climate and what's going on. Because obviously, bullets start going off down in Korea, metals are going to look pretty good. Speaking of that, Mike, obviously you're still working on your collars, but have you taken that into consideration at all? Maybe rolling your upside calls a little bit farther out than you normally would, because we might be seeing a pop in some of these metals going forward?
A little bit, yeah. I mean, it's definitely, if we do have, what we're kind of yes and no. We're kind of in the process of, we're still protected to the downside, but so we're kind of about halfway through it. So yes.
Now, Mike, one of the things I've been noting is that right now for traders that like to sell option premium, it is much cheaper to put together a portfolio of good stocks and then hedge, good stocks to sell in either credit spreads or whatever, and then to hedge with SPX, NDX, or RUT than it is to actually use those underlyings because of kind of where index vol is relative to individual stocks. Correlation is really down. I don't know if you guys have noticed that, but the market correlation is down, which makes hedging with indexes a little more difficult, but also cheaper and possibly effective when we get into like fear. One of the things is the market correlates really well when there's a lot of fear, and less well when there's not. So, how have you been setting up portfolio hedges? Have you been doing a stock to stock basis, or are you doing more of a kind of overall portfolio hedge, such that like I would advise, my income traders at Option Pit?
A little bit of both. In that we have one strategy I'm sure we've talked about on the show a lot, the Q strategy, to where you're doing the 6-month output and then selling near-term option premium.
Whoa, I thought the Q strategy is when you have a car that can shoot oil out of its tires and has like rocket engines in it.
No, that's the Z strategy. Get it straight.
And Mike, I love that you've got to put in your promotional material for the Q strategy. You got to figure out some sort of bond tie in there. That would be awesome.
Well, but then people get confused with how are we hedging bonds then? I got it. What about this? The Q strategy as a bond alternative. What do you think of that?
Oh, ooh, I love it.
Wow.
Just got to work M in there and you're all set.
There we go.
Great.
Anyway, to get back to your question, the Q strategy is where you own QQQQ and you're buying 6-month out premium as a put protection, and you're selling 1-month premium out of the money as the covered call. That's a section of what we do. But then another thing with which we do, it's a strategy called the Boss, and it's the bracketed option spread strategy. And the only reason we call it the Boss is because it rhymed with the DOS, the discretionary option spread strategy, which was our original strategy, which we had for years. So as you can tell, we're marketing geniuses. But
I love it.
Within the Boss, one thing with which we do is that we'll invest in the market sectors, XLE, XLF, XLK, the advanced technical term form that we like to call them the SCLUs, so to speak.
Mm-hmm.
And we'll sell covered calls against them or short puts if we get called out. We have various methods of what we'll do if we get called out, and it's sometimes we'll overweight one sector and underweight another sector, but the underlying hedging instrument for that is the SPX or the SPY, depending on the size of the account, or even XSP, depending if it's a smaller account that's in a taxable situation. But I agree. To give you an example of this, on the date of the flash crash, we actually realized in the Boss strategy how truly overhedged we were because of the fact that not only were we making money on the SPX and SPY puts when the market went down that day, but we had so much gamma involved with that, as well as the Vega, that we actually made money in that portfolio that day. And it was one to where we weren't trying to make money by any means when that happened, but it was one to where, because the way, like exactly what you had said, because of the way the correlations worked to the downside, it was amazing with how much not only the correlation worked, but also because we had such a spike in vol that it benefited us. So with that, I think you're right, and I think that we definitely need to have some portion of the portfolio hedged along those manners. And also, within the Boss, we do occasionally add in stocks on the individual side of it, but I would say it's not the core of how we position it. It just depends on the individual client.
We hit on gold and silver. Any other names you wanna touch on for the listeners in your commodity rundown, Mike?
Just pretty, MOO. We have some clients that are short and puts on MOO right now. MOO. That's a market vectors agribusiness, so to speak, and that's pretty much how we're exposing ourselves in the wheat and in the ags, so to speak. We're going with the actual companies themselves as opposed to the underlying, and we're just selling puts in that. We think it's an attractive time to be selling puts along those lines, and that's where we're at with the ags.
All right, and with that, we will close out. Well, actually, really quick on the old trading block. I know, too, you guys, we talked a bit about Visa last week and how, Mike, you've been playing in Visa. Well, those worries seem to spread to American Express today, too. They were down a bit and pulling down a lot of the major financials and indices with them. Are you guys watching that at all? Any of you guys play in Amex?
No, stay away from, not against it, but do not.
My wife plays in Amex, but very different meaning of the word. No, I've noticed all the financials have been kind of in this kind of, we had a nice little pop, and then they seem to have lost a lot of steam. And these credit cards, you got to wonder. I mean, it's a good business model, but you got to wonder how long it's going to be before people come in, before something like what's been happening was going to happen, I
don't know. I never underestimate the credit card companies and their abilities to rehide those fees in other ways and do other things, and to always repackage those fees somehow to keep, no matter what is outlawed, they will always find a way.
Yeah, if someone was going to redo the Adam and Eve story out of the Bible, it would be Eve being handed a debit card from it would simply be a 25,000 miles free with first purchase debit card that would represent the
forbidden fruit.
Forbidden fruit, yes.
The devil would say, "Go buy your apples."
Yeah, buy your apple with this debit card.
No interest on apples for the first 6 months.
Exactly. 25,000 free apples with first purchase.
Well, no, let's get the technology right now. Apple iPods, then, if we're going to do it.
Oh, there you go. Getting ahead of us with the Apple talk. All right. And with that, I think we will close out the trading block and move right into the odd block.
The odd block.
All right, and welcome to the Odd Block. This is the segment of the show where we discuss some of the interesting and or unusual options volume that we saw lighting up the tape today. And we're going to start it off with DRI, Darden Restaurants, Inc. This one closed at 50. That's a good response. I take it each of you will have something interesting to say about this one. Darden Restaurants closed at $50.43. Up 54%, up 54, I almost said 54%, up 54 cents. This is a name that does, on average, about 2,000 contracts a day. They did over 14,000 today. Not too surprising since they have earnings coming out. I believe they're before the open tomorrow. What I thought was interesting about this is not just that we saw the typical boost in order flow ahead of earnings, but that there seemed to be really very little consensus to the order flow. We saw equal numbers, essentially people were buying the straddle. We saw equal numbers of buyers and sellers on the Jan 50 strike, which is the at-the-money strike, obviously, going into earnings. The straddle went out about $4.15, $4.15, $4.30, around there. And so they're obviously pricing in a decent move tomorrow. And, yeah, we saw about, over 2,000 of the Jan 50 calls went up, were purchased right away today or throughout the day for about $1.92. At the same time, we saw 1,800 buyers of the 1,800 puts going up, getting bought on the Jan 50 strike for $1.76. So it's very, very rare that you see this level of symmetry in the order flow ahead of earnings. People are all over the map on this one. And I guess for those of you who don't know what DRI is, they own restaurant chains like Red Lobster and Olive Garden. And so obviously some people think that the unlimited pasta and breadsticks is going to do well tomorrow, and others saying that the days of Red Lobster are the best days are behind us.
Every time a girl says, "I love the salad and breadsticks at Olive Garden," an Italian guy cries. That is,
An Italian grandma dies. That's what it is.
No kidding. It is just terrible. I went through their entire list of restaurants they own. All right, you ready? They own Red Lobster. Couldn't pay me to eat there. Olive Garden. Couldn't pay me to eat there. Longhorn Steakhouse. Have eaten there. Will never go back. Capitol Grill. Hey, not bad. Bahama Breeze. Never been, but sounds cheesy. And Season 52. Never heard of it. Let me tell you.
I like Capitol Grill of that selection.
I do. That's the only one of those I actually knowingly would eat. I would actually walk into and say, I feel like eating here. Okay? Nothing bothers me more than this company's market capitalization. So, but that's just a personal feeling.
So world poverty, global war, and pandemics, those bother you less than the valuation of Darden.
Than this company at 52-week highs. No. All right? It is just, and, they're going to write me a dirty letter, but I can't stand Red Lobster. It's terrible. The red sauce at Olive Garden let me tell you, next time you feel like Olive Garden, run to the store, open a can of Chef Boyardee, and voila. And you saved yourself, $12 on the meal. Capital Grille makes a good steak. They do. I'll give them that.
So I take it by your comments then that those 1,800 puts, that was you going up on the 50 strike today?
Yeah, well, it could just be, you got to remember, we don't know what the underlying, to be honest, we don't know what the underlying trades are. If you look at the option chain, the straddle's not that pricey. $2.30.
It's about $4, yeah.
$4, beginning of the cycle. It's not that bad. I don't see it as a huge deal one way or the other. It's probably just people coming in buying some volatility, on what seems like relative lows.
What about you, Mike? You sounded like you grunted when we mentioned Darden. Do you have any experience in this one?
It's hard to, not as a trader, but in terms of as a restaurant, it's hard to follow Sebastian's opinion on that.
That was an impassioned appeal, definitely.
In case any Darden executives are listening, I love your restaurant. Send me some gift cards while you send him the nasty letters. But
Mike, if you think that's crazy, you should listen to my Chipotle Qdoba rant.
Okay.
That's a scary one. No, I'm just kidding. No.
Well, but one thing that I think about, like in terms of the company itself being at 52-week highs, and maybe it's bothersome, but I always tell people I can cook a better hamburger than McDonald's. If you go to Tucsaw's Backyard Grill or come over to my house on the Memorial Day or the 4th of July, I cook up a pretty mean hamburger. So how come I'm not wealthier than McDonald's? Well, McDonald's is is much better at marketing their hamburgers than I am. So I think that I don't know if I quite think Olive Garden is quite as bad as Sebastian said, but the bottom line is that it's a company, if they can sell Chef Boyardee for $12 for the extra sauce or whatever it is, then more power to them. That's America.
I don't know. I like that last commercial you did for Dr. T's Backyard Burgers. I thought it was pretty catchy, the jingle. You were coming in the background. I liked it. Don't sell yourself that short.
I would like to throw out that the earnings already came out today, and it's currently down about $1.50. Looks like it's offered down $2. So, thank you, society.
Yeah, it looks like they are out. You're right. So this release was wrong. It's not coming out before the open. They did it early today.
Yeah, so it's off over about $2. Looks like it's heading lower. I'll be really interested to see how this plays out.
Well, now that I know that this is your worst thing ever, we'll have to keep it on the horizon for future shows, and we'll bring it back up every now and then. We see some people playing in DRI going forward. The worst thing ever. I love it. All right, and then moving on then to completely different realm, specialty chemicals, because that's what we do here on the Odd Block. We jump around like schizophrenic kangaroos. W.R. Grace & Company, ticker symbol GRA. They closed today $35.67, down about a nickel, so all pretty much unchanged on the day. And this is a name that does about 450 contracts a day, so they're a size player in the options market. Today they did over 4,400.
Oh, wow.
For those of you who don't know, Grace, this is a specialty chemicals company. And looks like one guy came in and really just put on a size put spread in February in this one. This guy came in and picked up about 1,600 or so of the Feb 35 puts, paid $1.65 for those, sold the same amount, so he did it one by one of the Feb 30 puts for 41 cents, so he netted out to $1.24. This guy's looking for, obviously about 5% or so downside for this put spread to pay off. They recently hit a 52-week high of 36.10. So this guy could just be betting on a reversal there in the chart and getting some movement back to the downside. Like I said, it's not one I follow that much. I'm not into the specialty chemicals area. It looks like he's probably just playing the chart from what it seems like.
Yeah, and somebody followed up and did the looks like more of those traded a little later on, and then somebody also traded the 37.32 a couple of times in as a, well, they're calling it a straddle, but it looks like somebody traded the risk reversal or the strangle on at the same time. So real interesting. Yeah, somebody did. They bought the 37.32 strangle. So obviously it doesn't look like they really like what they're seeing on this as a long-term buy and hold on this stock.
That strangle went up a little. Looks like it went about 200 times, so a little smaller. Still, for a name that does 400 contracts a day, that's a big trade. So yeah, these people are expecting some movement. The guy in February not as certain as the guy, or the strangle book trader not as certain, obviously. But yeah, people are looking for some movement in WR Gray, so wanted to keep an eye on.
Well, a strangle can be a really interesting way to actually hedge a long position.
Yeah, that's true.
It's a protective put. It's almost like I'm either going to be protected. I'm going to be protected on the downside, but I still think it's going to go up, and you're almost like
doubling down on the upside.
Overdrive, right, on a rally.
Well, and plus, if it just goes up a little bit, you can cash out of your calls, and that finances the cost of your insurance.
Exactly.
And then moving on from there, staying in kind of the same realm. We're looking at GMXR. This is GMX Resources. This is a oil and gas company, and we saw this one closed $5.49, so it's a little one, up about 31 cents. This is a name that does an average daily volume of about 300 contracts, so another very light one. They did over 3,200 today, and we saw people playing again in the puts. More than 2,200 of the May 4 puts went up. There's an open interest on this strike previous to this of 359 contracts. This is all new paper coming in. And this is all one guy, one trader pretty much, put all this on. He actually sold these puts. He sold them for 37.5 cents on an average. So, yeah, this guy obviously looking long-term. He's obviously liking the premium levels out there in May and thinking this stock has continued upside ahead of it, or he doesn't mind putting on this GMXR down below $4. This is another little one. Do you guys watch this one at all?
Not really. I do not. But I'll tell you, you know what? He's selling. It's trading over $5.50. Selling these 4 puts at 37.5 cents. That's not a bad sale. He's getting, what, 8% return on his money, and relative to the stock, and he probably doesn't mind buying it for $4. Although, you look at this thing over the last 2 years, it could, it's been a while, but this thing is traded into the teens. So, it's not I don't hate it as a sale, for a cheap stock.
It's not a bad chart play either. This thing's only dropped below 4 once over the past year. That was back in August. Hit 398 back on August 24th, and that was the lowest it's been over the past year. So I'm looking here in the other strikes. Yeah, there's not much meat in the Feb 4s. Obviously, in the Jan 4s, they're non-existent. So if you wanted to hit in that range, you had to roll out to May. Other than that, yeah, there's not much else. Yeah, it's not a bad sale. I wouldn't turn my nose up at it. So yeah, this was an interesting one. Another guy probably playing the chart, seeing that there's some support down that $4 level, and wanted to just hit the premium and collect his money.
My question is, who sold this? I don't know that. Would you, or who bought this? Would you buy the May 4s for 37.5 cents in something that never trades? No.
Yeah, it's interesting. I don't know how he put this up.
Probably paid a hefty commission on it, I'll bet.
Good brokerage firm. They obviously shopped it for a while and found counterparties for all this, so they earned their double commission in that sense.
Yeah, unless they took it down, they may have facilitated. That'd be my bet.
Then they're even more worthwhile of a brokerage firm for you.
Well, yeah, but you're paying commission at the yin-yang to get the facilitation.
Yeah, anything they shop for you, you're paying at least double on anyway, so yeah.
Right, they're basically getting edge to take on the position then, and then they lay it off later.
Of course, what's edged in this thing that does 400 contracts a day,
Exactly.
You're getting your 8th or whatever it is, that could be gone tomorrow. That's why I never traded the flex or even the far-off leaps, because edge is a nebulous term when you get out that far, or in something as illiquid as this. Closing it out with just an update on one of the ones we watched last time. The Dollar General guys got lucky. That stock went out above 30, so those puts worked out. So all those crazy people who were short those things for a nickel to the last minute, it worked out for them.
Yep.
Radian, RDN, that one is kind of hovering around pretty much unchanged, down about 4 cents today at 7.75. We're still seeing some activity in those Feb 9s. This was one that used to do a couple hundred contracts a day. They did 400 again in the Feb 9s. Equal buying and selling today, 200 of each, so no consensus. Some people are legging into that spread. Still, other people are buying it, thinking it's not a bad premium level in Feb. I would tend to lean, if I had to pick, I would tend to lean buying that Feb versus selling it at that level. But so there seems to be a consensus out there on that. So yeah, a lot of
too.
But yeah, this is another one where the activity has kind of kept it alive. It hasn't kind of fallen off the radar, and the stock's still hovering in there. So that guy who came in and loaded up on 15,000 of those Jan 9s, he's still in play. They're down a little bit. They're 10 bid at 20. He bought them for about 35, 40 cents, but definitely could be some upside still in this name. So yeah, that's going to close out the old odd block, and with that, we're going to move right into, I guess we'll move right into the strategy block.
Yeah.
The strategy block.
And welcome to the strategy block. This is the segment of the show where we all gather around Uncle Mike's grill in his backyard. He chars up some good Mountain Man jerky burgers for us, which he's not that good at marketing at, but they're very tasty, listeners. I recommend you try them next July 4th. And we also sit around his grill and we bask in the glow of some options, trading tips and secrets and techniques. And so, Uncle Mike, what do you have on the Barbie for today?
The interest rate replacement collar. And what that goes about is that in our environment right now, it's very difficult to find someone a decent fixed income rate to where the risk with which you're taking on makes sense. You can make a case for the corporate bond in that you'll get a decent interest rate on it, but are you willing to take on the risk? Personally, I am not. The other way with which you can look for some type of a fixed income environment is to where you can use a government treasury, maybe a 6-month out, a 12-month out, or let's say we even go up to 10 years. You can go that route, and I would consider that a pretty safe investment, a U.S. government treasury. However, it's a lot of time to be tying up your money for 3% in the 10-year note or whatever the rates are right now. I don't even know if the short terms are even paying 1%, to be honest.
They're not.
So, okay. So with that in mind, that kind of puts you in quite the conundrum when you're trying to do something that's fairly low risk to where you can get any type of a decent rate of return. Now, I wouldn't have a problem having some type of exposure into municipal bonds if it made sense for the client and the term was short enough and you're spread out across the board. And once again, I want to emphasize some exposure, not a lot. But one thing that we're doing right now in terms of trying to help people figure out what's a way with which you can get something to where it is safe or guaranteeing the principal, but yet still having a little bit of upside. And if you take a look, and I'm going to oversimplify this example right now just to make it a little bit easier. Let's take a look at silver. Let's say that you're bullish on silver over the course of the next couple of years. Let's go out to January of 2013. Right now, SLV is trading at 28.71. And let's say right now the 29 puts are trading at 555 by 6. With that, let's say for sake of easy math, we get filled at, let's just say 575. And then the 31 calls are trading at 520 by 605. with that, let's say we get filled on the covered call at 575 for sake of easy math. I know these may or may not be realistic fills. I know we'd have to get really lucky on the 31 calls to get that fill, but let's just make it an easy example for the math that we're doing. So for the cost of buying the 29 put, we financed it by selling the 31 covered call. So now we have upside on silver from 29 to 31. And our downside risk is actually 0 because of the fact that we have the protection and the put option to the downside. So it's a risk-free trade. Now, with that being said, is that something that's extremely exciting? Well, no, not exactly, because of the fact that we have 760 days till expiration, or, when you look at it that way, a little over 2 years. And you have the ability to make 7% over 2 years, and with that, you have that chance. So let's just say 3.5% a year, assuming that we get great fills and that silver goes up. Well, 3.5% per year is the potential of the trade. And if silver tanks, it's mathematically impossible to lose money with the exception of the commissions. So one thing that we're doing for people right now that are looking for short-term fixed income is we're putting on collars like this. And silver is one of them. We actually have already been playing one out for January of 2012 that it is going to work out on. But nonetheless, there's other things with which you can do this on. Commodities can work well for it because of the reverse skew that's involved. And at times, very volatile stocks can work out well as well. So if you're looking for trades like this on your Options Express screener, you might want to do something in the screener section looking for higher volatility stocks to where something like this may exist. So step one, what you can do is be bullish on what you're investing in. If you're not bullish on what you're investing in, you're just wasting your time. Step two, find an instrument that has a lot of volatility. And then step three, go out as far as you can and determine how can you make this trade risk-free and still get at least a decent rate of return over the course of the next couple of years. Now, a lot of times we'll expand this a little bit and say, okay, we're willing to take a little bit more risk to take on a little bit more reward, and that's just about customizing the collar itself. But in this fixed income environment with which we're in, this is something with which you might want to consider in lieu of short-term bonds.
Well, Uncle Mike, it was tasty as usual.
Wow.
That was a good tip, almost as good as the burger. But I hear Sebastian groaning. So he loved my pun.
Well, no, both of you. I loved your pun. I loved your story. I feel like I just ate a filet mignon stuffed filet mignon. It was
from
so
Longhorn
good.
Steakhouse. Was it that good?
It was a Longhorn Steakhouse stuffed with a Red Lobster covered in Olive Garden tomato sauce.
I thought you said you liked it.
Yeah, I liked it better than Longhorn Steakhouse. I'll say that.
Yeah.
You know, I'm not as down on Longhorn as you are.
No. I mean,
a quick steak when you're out at a mall or something. You want something not as crazy as Capitol Grill, and you got a little guy who's screaming. It's not a bad destination, I think.
There you go. See, not everybody hates Longhorn.
See, he's buying the puts, I'm buying the calls on DRI. That's how it works. Now we have a marketplace. All right, and with that, we will close out Uncle Mike's strategy block. You can return to the mountains or return to the grill. Your choice, Uncle Mike.
To the mountains I shall go.
And we will move right into Around the Block.
Around the block.
And welcome. By the way, I love that sound clip. To the mountains, I would put that in every show.
That should lead off his thing. It should be like part of his.
Well, shouldn't it end everything?
Maybe.
It should be the ending of everything then.
All right, and welcome to Around the Block. This is the section of the show where we discuss what's on the horizon for the next few sessions, both from a macro and a micro sense. Coming up this week on Around the Block, obviously we have GDP coming up on Wednesday, the old third revision, third estimates, and those are always fun. We have initial claims as well on the 23rd. Not too much on the earnings horizon. We've kind of hit the hit the bulk of them now. We're kind of in the doldrums until January in terms of earnings, but got the Michigan sentiment as well. That's always, or your final revision anyway on that. It's always a fun one. Of course, I'm not sure how much of those numbers are going to be driving us with so many other macro events kind of in play. We're seeing Spain slowly circling the bowl. We're seeing Korean Peninsula starting to heat up. So a lot of other things could overwhelm these on the macro front over the next few days. What are you guys watching?
I'm just Mark?
Go ahead, sir.
All right.
Go ahead, Mr. Sebastian.
Grazie. Yeah, and per my MO, I'm just watching this volatility. We had a real precipitous drop on Friday in the VIX, and that was basically all of Christmas pricing out. Okay? So it officially, there is no more holiday decay to come out based on my calculations. So now what I'm watching to see is, did volatility get oversold? And is this an opportunity to come in and pick up some cheap premium and catch the market sleeping on a down day and get out on a cheap option buy with 100% return in a day or two on a market drop? Can happen really easily if you play your cards right. So that's kind of what I'm looking at. I'm looking at let's start treaty. I don't think that really matters. The tax stuff looks like it's all done. I'm looking forward to a relaxing couple of weeks. I don't think there's going to be a lot going on, but at the same time, I'm just going to be looking for some cheap chances to buy short-term volatility, and then I'm going to be paying attention Thursday morning because I think that Thursday morning's weekly is going to decay its entire, how much of the weekly options that get released Thursday morning, how much of that decay gets
all in like the first 2 hours?
In the first minute. In the first minute.
So you have to just pretty much hit the first bid you see?
Well, market sale on open will be the highest price of the day. Very rarely would I ever suggest market on open, but I think that's going to be the cheapest price of the day. It'll be real interesting.
I remember you talked a little bit about last show about Apple vol being kind of oversold at this point, and your colleague, your buddy over at Option Profits, Ofer Gottlieb over from Live Vol, he wrote something on our site the other day about Netflix. Said the same thing for Netflix. So
that straddle got cheaper again today. At $18, it seems like a decent buy.
This is Apple or Netflix?
Apple. Netflix. Let me take a look here.
Is that what you picked? Did you pick buy the straddle in the Apple?
What I said was I don't have a directional opinion, but if you do, I would set it up with the at the monies. Since vol's low, try buying a straddle, but be very aware of the time decay and the volatility exposure of a straddle. Yeah. Netflix vol is a little different than putting a leg out on Apple. If you buy Netflix vol, you're still buying 46% implied volatility in January. You buy Apple, you're buying 23%. So there is a major difference there in the elevated price. At any given time, a company like Netflix could go into kind of being a little bit more mature and actually change its vol. Volatility is mean reverting, but people forget that as companies mature, where it's reverting to can change. Apple, on the other hand, at 23%, I consider that to be kind of a mature company's volatility. And, maybe a little elevated, but certainly nothing crazy. So.
Yeah, it's definitely a mature company these days, and you're right. That vol level is relatively palatable, and especially now, like I said, going into January, which actually is a relatively active time for these companies. You could see a couple different things. You could see some surprise tablet announcements at the Consumer Electronics Show in January, early January. That could cut some of the legs out of Apple a little bit, or you could see a surprise announcement from Apple. And they could take off to the races. Either way, I think you do all right with that straddle, or maybe you could price it out and do a strangle if you're a little more price conscious.
Yeah,
that 310, 330 that's $9. That's not that bad either.
No, the 320, 330 long call spreads under with Apple $2.50 in the money. You can buy that spread for $4.50. That's not a bad buy.
That has Tusaw written all over it, the master.
It
of the
really
vertical
does.
cut.
Okay, full disclosure, I guess I do play my hand. We do have some people in that exact spread.
I can always sniff out your plays, Tusaw.
Yeah, no kidding.
So I take it you agree then that Apple Vol is cheap here?
I think that, Andy, it's one to where this is one to where it's complementing a lot of what we're doing on the collars with Apple right now, and different clients are doing different things. Apple's a stock with which everyone has their own unique way of playing it. It just seems in the financial advisor world, Apple and gold are the two hot things that everyone wants to talk about, and for valid reasons. But typically we don't do too much on the short-term side of it, but this is one with which going into earnings that we are looking at, and that's how we are playing it. Some people were short some puts on it, but it's part of a bigger portion. But that exact trade with which you mentioned, we do have some clients in the 320, 330 bull call spread for the month of January going into earnings. And then if Apple doesn't, because earnings is actually the Monday following expiration for January.
I don't think January is the earnings month for this one.
Well, the stock ran $40 into earnings.
That's what we're looking at, yeah.
It's not like the earnings itself is what you wanted to play. It was the huge run-up.
Yes, exactly. We're playing the run into the earnings because earnings are actually the Monday following the expiration Friday.
Right.
So, Mark, as someone who spent some time digging into this, what's your feel on Feb Vol then in relative to Jan Vol? Probably a little bit richer because of earnings, I would imagine.
Right. It is not as oversold, believe it or not. It's actually relatively fairly priced. If you look back over the last year, it's right in the middle. It's only the 30-day vol that is really this cheap. So they've got the 60-day vol pretty well priced. Might actually be an interesting little time spread. You could buy Jan and sell Feb and collect 7.5 points of vol. That is unbelievable.
Yeah, you get a nice little pop from some news in early January from CES or something like that, or maybe they announce their new tablet early and you'll do it right on that spread.
Yeah, and there's going to be some decay. I mean, there's going to be some decay out of the Feb regardless. So it's an interesting little spread. Feb is actually rallying a little bit while Jan is just getting smoked. So it's real interesting. I think they're getting a little over-aggressive on the sale. I may scoop in and buy some more tomorrow.
Mr. Tusaw, anything else you guys are watching over at Know Your Options?
No, I mean, just we're going into the year-end, and what's going to be interesting to see, are we going to end the year on highs for the year, or are we going to pull back a little bit? That's probably the main thing with which we're looking at. And, if everyone out there is bullish, hopefully it ends up higher and we can continue the rally into the next year.
Yeah, well, we'll see. I haven't been super bullish of late, but that's been for a while, and the market is completely ignoring me in that sense. So maybe you want me to continue to be bearish. I am your contrarian indicator.
There you go.
Second, I start being all rosy and bullish, it's time to start selling. And that's going to do it for this episode of the Option Block. I want to thank both of our panelists today, starting off with mixing it up again this time, starting off with the man from the mountains, Mr. T himself, Uncle Mike.
Mike the Mountain Man.
More webinars going on this week, or you guys kind of done for the year in the webinar sense?
Now we're going to finish up. We have one on this Sunday night on spread trading for sophomores, where we're going to be covering credit spreads, debit spreads, and touching on diagonals. It's kind of like an intermediate webinar if you've done some calls and puts in the past and are looking to kind of get a little bit more advanced and go into the spread world. This webinar will be great for you.
Yeah, you can use Apple as a good example. I'm sure a lot of your listeners would love that. They all love these names they know and recognize.
Definitely.
You can talk about legging into that Feb-Jan diagonal time spread there.
That would be spread trading for seniors. So.
Oh, okay, that's the next one. Okay, all right.
Yeah.
And then, of course, we have Greasy Meatball himself, Mr. Sebastian. What is going on over at Option Pit for the next week or so?
We're still pushing our, I'm doing the AM Pit Report every morning for about 10 minutes, 9:50 Eastern Time. You can catch a listen to me live trade a couple things. Right now, what we primarily have on, we're messing around with a ratio spread and then a very short-term butterfly, so you can watch me trade that stuff. And obviously we've got our L2 Level 2 prep course that's starting in mid-January. Use offer code OI2011 and you'll receive $100 off.
Yeah, so, just enough money to save to put towards your commissions for all those Apple trades you're going to be doing.
Right. Well, what you should do is take that $100 that you save, write a check, put to Mark Longo, Merry Christmas, from, and then insert your name. That's what I would do.
That's where all those mystery $100 checks have been. Our office has been awash in $100 checks lately. I wasn't sure. I thought maybe some newsletter put us on their list of send checks to him.
You're on one of those pyramid schemes.
Exactly. Now I have to pay each one of those people $1,000.
Right.
Scrappy deal for me. Yeah, and of course, our listeners, if you want to hear more of the unusual activity or any of the breaking options news or any of the other interesting topics we discussed today on this show, you can find it all at theoptionsinsider.com. Leave on that S, options for savings. And then, of course, I want to also remind our listeners that we will be off for the rest of the week, so enjoy the rest of your holiday week, and we will see you again next Tuesday, same bat time, same bat channel here on The Option.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.